Tests. Looking to see if we're dropping any frames here, so hopefully not. Good evening. I hope people can actually see this now. Good evening. Checking a couple of things here, seeing if anybody can actually see this. Looks like we are actually live. Okay, good. Wow. Heavy duty, good. All right, good. Apologies for that delay there. Kirk, all good. WF, hello. Good evening, everyone. Apologies for the delay there. I'm trying to fix these live streams, and it looks like if I stream at lower kilobits per second, it doesn't drop nearly as much. So I hope that the stream is smooth, and we're going to monitor this the entire way here. And yeah, let's go ahead and get started and hop into the charts. Good, loud and clear. All right, awesome. All right, so let's take a look at the charts here. Let me close some of these, and actually let me bring over the larger chart. So we can take a look at these bit by bit. So, okay, so excellent. We are live. I see you. Matrix has me. Yes, Matrix has definitely got me. So we're going to do some weekly prep here, and we're going to do exactly how I would do it each day. So I'm grabbing my first things first. I look at where the new week opening gap started. So you can kind of see where we closed last week, roughly around there. And we opened the week around here with a new week opening gap, which we've traded to halfway point already. So I like to keep these exact. So this open is 17,237.50. So I'm going to have that exact here. And this close was 17,180 exact. So we're going to have those on our charts as well. So once we have those on our charts, we can let price do its thing right now. We're not going to trade that yet. We want to look at the weekly or the monthly, weekly. We can kind of see how on the monthly chart, we have actually engulfed the past 3 months worth of body damage here. So while we did have this kind of like volume imbalance here, remember I mentioned this volume imbalance on the monthly chart. Let me see if I can zoom in a little bit. So you remember that monthly imbalance right here? We blew through that as well. So what's left? Well, there's a couple of monthly targets left, right? So this this previous monthly high is going to be important, as well as this 16,582 IPTA low. If we break below those, we're going to end up targeting these two areas on the monthly chart. So this low here forms the high end of this monthly buy side imbalance. So this low being 16,179.75, we want to make sure that's on our charts as well, as it might reference that sometime this month. So this high here, 15,928. It's a ways down, so I'm not going to put a huge emphasis on it. I think there's a long ways to go before we get there, but we're going to have that on our charts nevertheless and be able to look at that closer. So this weekly, we'll go down to the weekly next. We know that there's these draws on liquidity. So anyone right here who was short when this blasted through, if they're short and we're bullish, then potentially we could see price react here, maybe a small buy to get those shorts, scared shorts out. But from a weekly perspective, and we'll see that on a weekly perspective here, we have now broken down, and this is the weekly chart here. So we've now broken down well below this short-term low and this short-term low and this short-term low. That's 3 short-term lows we broke down through. Yes, we did reach a down close candle on the way up here, but I think that what will end up happening is we will treat this as a consolidation zone on the higher time frames. So we should see a bit of consolidation here. Maybe we head back up and target this week's mitigation block, maybe this mitigation block don't know yet, but these are each of these short-term lows are now key candidates for us to target on our price range back up. So we are expecting a bit of range here within this whole segment here. We're expecting consolidation here for a little bit, and I do think that this movement below these few short-term lows, this displacement tells me that we're flipping bearish, at least for the next couple of months, until maybe at least until the end of May. So April in general tends to be a more bullish month, and then as you can kind of see, we're at the latter half of the month now, and May tends to be a bearish month in general. Now, since it's a election year, it could be different, but my sights are set on a displacement lower, maybe a retracement higher for us to displace lower. So a lot of people, they might end up panic selling as well. So we'll see how far we go, because it is an election year, we might not go that far down. So on the weekly chart, you still see that we've broken through this and balanced this out completely. So the low of this buy side imbalance is going to be important here. We'll have to see how we trade to this low, how we trade to the midpoint of this balanced price range now. So we've traded up, had imbalance on the sell side. Now we want to see, does it respect this, or maybe does it trade up here first, create a little bit of a fair value gap remaining, and then trade up higher as we get closer to the coming weeks before we drop further. So my bias now is bearish, but that doesn't mean we can't go see retracements, right? So from a weekly perspective, I think that we have the ability to trade up a bit, and then we'll target this low and this low. So that is my initial thought here. Let me get rid of a few of these other markings here. On the daily chart, we'll see that in a little bit, but that's my bias. We could we drive all the way up to here? Yes. That is possible for sure. But I do think that it's more likely that we take out this low here and this low, this close and this low. So that's what I'll be keeping an eye out for. So we're now on the daily chart. So on this daily chart, we've had 4 out of 5 days were red days, and we've slammed through 20-day, IP to 20-day low and IP to 40-day low into this weekly imbalance. So you can kind of see here that we traded down to this down close candle here, and we couldn't get too far below that, right? So what might happen this week? Well, if we see us trade lower this week, I imagine we end up trading higher and consolidating. I'm looking at this range. I'm looking at this area as being an area of consolidation, and even so, this segment here as well. So I anticipate that we could reach down for that. The IP to 60-day low is a really important one as well. That could be a draw on liquidity, considering its key level as well. So overall, I want to see us, because we've gone down so swiftly, I'd like for us to see if we trade back up to this daily fair value gap here, and then go from there. Let me get rid of some of these. It's a little hard to see here. I have to get rid of some of our old markings here from the previous week that are no longer salient. So I'm gonna get rid of a few things here, okay? We never got back up to this sell side imbalance, so we can treat this as a breakaway gap on the daily chart. So we don't anticipate price coming back up here anytime soon. But what would this allow us to do if this is our premium and this is our discount? Assuming we don't go any lower, we have a few areas leading up to equilibrium. I don't think we're done yet, but we see that we had, on the daily chart, we had this low broken, and we couldn't break through any highs. So this high, from this high right here down to this broken low, this broken low, this broken low, and this broken low, we now have a new dealing range here. So this is our total dealing range. So equilibrium is going to be considered above this if we don't keep on going lower and finishing off this area of consolidation. Okay, so I'm looking for price to retrace a bit or at least consolidate. So be careful this week. We do have a few economic events here. We've got a handful that we need to be aware of, and they happen all throughout the week. So this week, Monday, there's nothing really. We have Tuesday, flash manufacturing PMI, 9:45, 10 a.m. So morning session, morning session, morning session, morning session. These are all in the morning session before we go live. So you want to be very wary of what's going to happen, and you're probably going to see some pretty nice moves, and then some choppiness once the opening range occurs. And I have a feeling you're probably going to see a few end of day runs as well. And it's not going to be easy to see which direction we go. I imagine that we are going to consolidate a bit and retrace. That is my bias for this upcoming week. And if we are extremely bearish, we might head down towards this 16,582 IPTA 60-day low. So we might not head there immediately, but with a bearish bias going into May, for sure, by the end of April, we'll probably target this area, or by early May, I imagine. And then, of course, there's that monthly level that we might target all the way down here. It would be a little trickier for it to get through this mitigation block here, but it's not to say that it couldn't just blow through that and then reach towards that. I have a feeling that's what's going to end up happening, but let's see. So that's it on the daily chart. We know that there's fair value gaps above us. We can see them pretty clearly. We know there's a volume imbalance here. We know that there's a big fair value gap, sell side imbalance up here. So these are all targets. There's a bearish order block here. There's a fair value gap here, bearish order block here. We know the midpoint's somewhere around here as well. So a retrace higher would make a lot of sense, but not immediately. I think it's going to be a little bit of a consolidation, a retrace higher to go lower. So I think the really big move is going to happen in May. It's going to be a retrace up to roughly, maybe like 17,800 area, 17,700, around that 17,800, 17,600 area. Depending on how it reacts at this IPTA 40-day low, the 17,620, I would look to see if it has room to head higher into this tiny little fair value gap you see up there. So you see a small one right here, right? So this fair value gap you'll want to have on your charts because it's right below a bearish order block too. So I would have that on my charts from the daily chart perspective. Let me see if this is actually a volume imbalance or not. This close here is 17,530. This open here is 17,530. So it's exact. There's no volume imbalance there. So there's this area of liquidity in a severe discount right now, or there's this area of liquidity within the current dealing range. Remember, which is up here to down here. So that technically, this sell side imbalance is above the 50% mark, and this bearish order block also happens to be right at equilibrium. We did not take out this short-term high to the upside. So this, while we do have this swing high to swing low, the actual total dealing range, in my opinion, is from this high down to this low. But if we do consider both, meaning this is the most frequent one, then our 50% line doesn't change much. It's still around that bearish order block. You can kind of see that, right? So keep this bearish order block in mind. This is going to be important. If you do see a retracement up to this level, right when we get there, it could be this week, could be next week, but when we do, this is what I'll be looking for a high probability short, because now I've got a few things running for me, right? I've got a failure swing here high, low, lower high, failure swing. We have mitigation blocks sitting right above here. We've got a fair value gap and a premium sitting right above here. We'll probably see mini sell-offs around here, but I would imagine we'll see a spike up and then head downwards from there. So that's what I'm anticipating happening in the coming weeks. Okay, so with that in mind, with that type of movement in mind, we know we had a huge range week. We know that there's a possibility of us retracing. So what we want to do is we want to consider, okay, will our first few candles, and I think I need to make these into old new week opening gaps because these are old and not current ones. I'm going to make these dark gray. Let me get this off of here. Let's go down to where could we aim for next as well. So this bullish order block, we could certainly aim for this area. It happens to be in an area of consolidation. And lastly, this IPTA day 60-day low is another key area within this greater, right below this monthly here, right? So we see this monthly key level. We see this key low. If we start to head towards that, that's what I would expect because this is already balanced. This has been traded up and down, up and down. This traded upwards, came back down to that balanced price range, headed higher. So this area of consolidation, I think would be I would consider that to be my core start of a market maker sell model. This would be the original consolidation. I would consider this to be and then if we head even lower, then this would be the next target. That would be very, very, very brutal, but not to say we can't do it. But during an election year, I can't imagine they would let it go that far, but things have been worse at earlier different years. So we will keep in mind that we are in consolidation. We want to see there's a high likelihood that this close and this low get targeted first. Maybe this short-term low down here as well on the daily. So keep those marked out on your charts, and have this buy-side imbalance on January 8th marked out as well. You can use a blue box if you want. I use purple lines for daily targets that are further away, but I like the fact that there's a fair value gap beneath this short-term low. So if we do end up starting the week heading higher, then I fully expect the weekly expansion to head lower to target this low here, which is 16,935, and this daily fair value gap down here. So make sure you keep those on your charts. It's going to be important. It'll be important there, and you'll want to have those on your charts. So, okay, cool. So let's go down to the 4-hour chart. I'll get rid of some of these items here, but actually, you know what? We'll leave those on because those are going to be important later. Okay, so on a 4-hour chart, we can start to see new week opening gap 1, 2, 3, 4, 5. So we have 5 new week opening gaps on our charts, which is fine. That's exactly what we are aiming for. So we're really far away from them. So this is good. This gives us an idea that we won't be bouncing back and forth between them as much. So we can have a little bit clearer objectives here. So this trend downwards, we've seen clean 4-hour bearish order blocks, clean bearish order blocks here, right? Where price traded back up to it, instantly rejected, price traded back up to this low here. There's a bearish order block on a lower time frame on this one, so that's probably why we didn't see this. But price traded, create another bearish order block, traded lower, and right now we've traded to the low of this bearish order block as well. So this whole range is a 4-hour bearish order block. So what we want to do is we want to bring this here, and what we frame, if we are indeed bearish, then what I would end up framing is based on this range that got created here. I wouldn't want to see, if we're very, very bearish, I wouldn't want us to see us move above the consequent or the mean threshold of this bearish order block. I mean, we're in a huge discount right now. So I imagine we will, if we do end up trading up into there, then we'll probably sell off and head lower, expand lower, and then branch down into this area, and then kind of like go back up to new week opening gap. Given that there's only unemployment's like one of the major items this week, I don't think that we're gonna end up going too much lower than this. But last week was really, really, really thick, heavy price action. So there's a lot of people who are gonna be FOMOing short. There's gonna be a lot of people who are gonna be missing out, fear of missing out, right? So when you see jumps here, you're probably gonna see some pretty wild short squeezes in the short term. So keep that in mind as you do see this range being a consolidation range, which could be an original consolidation for consideration here, right? So because this range could see consolidation, you'll want to make sure within this range, you're targeting this here, this short-term low, and this fair value gap. It could spike down below it and then immediately retrace. This is where I'll be looking to see if we have turtle soups, or if it's going to continue, we'll target this low here. Robert Mathers, hi Johnny, are you ready for NQ 12,000? That is quite a prediction there. I mean, that's all the way down here. I think that'll take some time for us to get down there. We have a lot of monthly movement to get down through, and I think it's going to take a lot to get down there. And since it's an election year, I have a feeling that it could spike, but not that far down. If you zoom out, we're still in a pretty decent bullish run. We haven't, on the monthly perspective, we are still within this, in general, stocks are still moving higher. So depending on what will happen here, there's possibility, even if this run from where we're at right now, even if we drop 50% from here, it would still bring us to around this midpoint here. So I'm not too concerned. I will ride it down until we see a consolidation, and then ride it back up when we start to see and hear things like government has to step in to help the credit, big credit event happens. So when you're listening and watching price go down, whenever you start to hear the government start to step in to save things, there's likely going to be one big final, big crash down, which will look like a big candle, a really deep candle downwards. And then the government will step in and pick up the pace, similar to how we did back in 2020. This doesn't even go back that far back now on the weekly chart, but so this was 2020's spike down. Government stepped in, started printing money, and we had the wildest run of our lifetime, right? And from 2020 to 2021, and then we saw quantitative tightening occur. We had a 50%, over 50% drop here. We took out a short-term low. We took out we went down to original consolidation, and then we continued heading higher. So markets are primed to continue heading higher, but we might see a larger protraction this time around. There's no more money to be printed. If we continue printing, inflation's going to get higher. If inflation goes higher, stocks are going to probably end up pursuing their pathway lower. Robert Mathers, we take out 14,500, swing low. That could form a lot of bearish PD arrays. Yeah. There's a lot of bearish PD arrays already around that area, but yeah, 14.5 around this area for sure. I think that this would be too much consolidation here for it to head much lower than that. I think that that would be an insane premium for many people to get in, many institutions to get in. But who knows? Maybe it's one big giant consolidation here, you know? When it gets too low, though, in a discount, I mean, markets generally are primed to go higher. I think that we won't get that low this year. I think that the election year is probably going to make the government take some action so that the stock market is not plummeting. That's just too easy of a gimme for the current president, standing president, to do something and forget and essentially he'd be giving over the presidency over to probably Trump. So yeah, I think there's a lot to go here. We're gonna trade what we see, and what we see here, you can see clear areas of consolidation. Return away from it, return to it, then slight consolidation here, movement away from it, movement away, moving away, moving away. Now we have our displacement. So where's our second stage displacement is where we need to ask. Is this going to be second stage displacement here as we target this low down here? And then as we target this monthly fair value gap, that's what it looks like to me. So within the April and May months, it seems to me that this monthly, remember we marked this monthly one out here, this monthly buy side imbalance is what I imagine April and May to target before heading higher. Okay. So that's a very, very macro view. Keep that in mind. Doesn't mean we can't head higher, right? Doesn't mean we can't head higher, but we can certainly retrace before heading lower. And given the state of this type of price action here, and I'm going to delete all of these lines here. We don't really care about stuff this far up anymore on the lower time frames. I just haven't had time to delete all those yet, but they were used for reference as I was doing some journaling from some of my trades this past week. I wasn't happy with some of my trades and I was happy with others. So hopefully you've also been able to journal. I hope you've been able to take that and journal appropriately. Because there are, let me get rid of a lot of these too. So it's just everything will be clearer here if I can get rid of some of these. I'll have to go to another chart and do it, but where does dollar end up if your targets hit? Well, let's take a look at dollar real quick. So dollar index, right? Let's go to a weekly. Right now, if our dollar index is bullish as I expect it to be, we target the relative equal highs up here, and we target this sell side imbalance here. So I believe dollar could reach up into this 107 to 110 range if we get that really bearish month of March or April and May. Now, one thing to consider on the dollar is that on a monthly chart, you can kind of see how we've already traded way up into this segment here back during this crazy run on the dollar. And we went up to a bearish order block coupled with a bearish sell side imbalance, buy side inefficiency. We left some up there. So we could potentially trade up even further into that area, targeting this rejection block here and this high up here, as there is a fair value gap above us still. So this run in general, with this spike up and this spike up and this accumulation, it's still generally bullish dollar for me, which would indicate bearish indices. So I'm of the impression on the higher time frames that the dollar will continue to rise. Um, Least estimator, love your content, by the way. Oh, thank you. Least estimator, I don't think like that. In elections, government spending's increase, so spending's going to pressure inflation. I think we see a big Fed pivot. That's the main macro theme these days. Yeah, could be. Absolutely. I think that inevitably, like we've seen this happen in previous years too. If there's a big enough of a credit event, the government's going to step in. I agree. Yep. Fed pivot. The problem with the Fed pivot is that if they pivot and cut rates while inflation rages higher, that's only going to cause inflation to rise faster than they would have expected. So the Fed's in a really weird spot where they can't raise rates, but by also not raising rates, if inflation continues to creep up, it's like, what can they do? They either risk a really big recession by cutting rates or keeping rates the same until inflation subsides, or they, for some reason, say, hey, higher inflation for longer, and all of us have to deal with inflation being higher on our food, our goods, our resources, gas, petrol, electricity, copper, cocoa, resources for food again. So things like that. There's a lot of considerations that could happen, and election years are a little bit more difficult because of that, right? So while we do have those considerations, we still stick to what we see on the charts. And what we see on the charts now is a clear displacement lower. There's nothing, it's happened. Remember, for weeks I was saying, remember on many weeks ago, before we had this big black week here, I was saying, hey, I'm not bearish yet until we see this one of these short-term lows. And we actually didn't. We created one more up here. You can't see it very easily, but we blew through that one, that one, that one, that one, that one. All four of those we blew through last week. So my bias has shifted bearish temporarily until we get to, and we can kind of see how there's this short-term low. Sorry, this is an intermediate term low on the weekly chart. There was never another low that got broken below that. So this whole area is now our weekly dealing range. So what does that mean? That means if we can take a fib from that swing low to this swing high, on the higher time frames, this is our dealing range. So where does that mean equilibrium lies? Right here, 16,650. And what's right beneath that? 60-day IPTA low, that's 16,582. What's right beneath that? Monthly buy-side imbalance. Where does that buy-side imbalance happen to be? At a 61.5 optimal trade entry, 61 to 70 optimal trade entry. So while I am temporarily bearish, like meaning in the next couple of months, I do think that we can reach down into this segment here within this 50%, 61% area. I think that's my target for the month of May. Maybe at the end of the month of May. Okay. So yeah, those are my initial thoughts for where we could end up in May, because April generally is a bullish month and we have seen nothing of the sorts. When we see nothing of the sorts in April, right? That means to me that May is going to be even worse, in my opinion. So for this week though, let's go down to the 15-minute chart. We can see a little bit more here. We clearly see that there's a liquidity void to be filled. It's been balanced here, so there's still a little bit more to be filled here to the downside. So if you're trading Asia and London, I would look for this gap here to be filled. This liquidity void should be filled here. And then I would expect either displacement below, targeting this short-term low here, or a little bit of bouncing in between the new week opening gap before heading low. So keep this in mind here. Let's go to a little bit higher time frame real quick. I think that this was a weekly. So this gray box is a weekly bullish order block. I don't think it's a bullish order block, nor do I think that we'll respect this in the long term, but it will be a key area of consolidation because we do see that this is a balanced price range here. Price is traded lower, it's traded higher as well. Can we respect that weekly bearish order block? Absolutely, we could. I would like to see us reject from there and head lower from there, though, because of this type of price action that's here. Now, if we consolidate for too long around here, that could also start our trek upwards a bit within this range here. And that's why I still have this red box listed here. I don't think we're going to make it all the way up there, but I do think that we are going to end up going up to that smaller one on the daily chart, this one here. I do think we're going to come up to this one at some point. Okay, so that's so I'm thinking if we head upwards, we are heading upwards to head lower. Maybe we head upwards on the hourly chart here. Maybe we head up to this bearish order block's constant mean threshold, and then we drop from there. There is a sell side imbalance here to be targeted. So this would be the next sell side imbalance I would be looking to target. And it's a pretty big one. So combine this sell side with, oops, come on. Combine this sell side with where mean threshold is on this here. We see that this level right there, I'm going to mark that at a black dashed line. I don't want to see it trade any higher than that. Okay? I'd rather, it can wick above it, sure. It could wick up here, take some levels, but if it's very bearish, I would like that these candles, bodies, respect this dotted line there, which is the midpoint between this whole order block, high and low. And so this is a level I'll be watching really closely to potentially enter more shorts. If we are still very bearish, as I think we are, if we see us start to close above this and start to consolidate above here, like for some reason, if we see a major green move and we see displacement above here, well, that's going to lead me to believe that this is a low, high, lower low breaker, bullish breaker, and I'll look for this high to head us higher into a market maker buy model here, and potentially up into this area. So yeah, that is all I've got for you today. So we will need to wait and watch to see how Monday pans out, but watch your levels, watch your key economic events here. Make sure you're aware nothing's happening on Monday, so be really, really careful trading on Monday. You have had such a huge range week that Mondays after this big of a range week are generally not going to be the best to trade in the morning session. So if you're going to trade on Monday, try to trade in the PM session. You can observe. Maybe there's going to be a big play to the downside in the morning. Maybe. But I don't think that, I think that it's going to be choppier. Generally, it's choppy. But Robert Mathers, hey, Johnny earlier mentioned Coco. Did you see ICT's Coco mega trade? I did, yes. Absolutely bonkers. But I haven't traded commodities as long as he has, so I only look at oil from time to time. I haven't branched out into the other areas and commodities, but they're definitely worthwhile studying. I think trading these indices has been enough things to capture, enough to master for now. And I'm looking forward to continuing heading towards potential payout soon. So so yeah, for you all who are still here, so I have an update for you in terms of my accounts here. So I have, as you know, I have 5 PA accounts, and I have 150K, and I actually have 4 150Ks now. So I on the day that I encountered really bad internet, and I was getting kind of tilted because I kept on getting disconnected from all the like bug stuff and the dropped frames. I ended up getting disconnected on a really fast trade, and that tilted me because I got stopped out when I couldn't even handle the trade. This is on the lesser 50K account. So remember, in the beginning I had 2 50Ks and 3 150Ks. So what ended up happening was I broke some rules and I traded that 50K because I had undergone a couple of pretty tilting, like uncontrollable, like disconnect out of my control losses. I ended up blowing that account. Like, so there's one performance account that got blown completely. Fortunately, I was able to see enough of a move remaining on Friday to pass a 150K account too. So I lost 150K account, I gained a 150K account. And that's something you've seen me do in history too. I've been able to pass those 150K accounts in no time. But I am a little ashamed that I couldn't not get tilted off of just the disconnects that were outside of my control. And the good thing is the main 50K account, that one's at about $2,100. So it's close to the threshold where it stops trailing. So just want to give you an update there. I still have that account. I'm still expecting to move that one up slowly and controlled, as I have been this whole time. That one has had 18 days traded. So as you can kind of see, there's been little chunks of improvement on that each and every day. And I can only trade 2 days, maybe each week, right? Maybe 3 days if I'm lucky because of my job. So that one's still on track. And then the other 2 150K accounts that I started, those are on track as well. One has $3,083 in it. So you need to get to, I think, 5,100, or what is it? 150,100 before you can start taking payouts on that one. So a couple more grand on that 150K account, and I should be able to start getting to the threshold where it stops trailing me. So that's where it really gets exciting, because then I expect to make, for every 1,000, I'll take 500 and continue letting the rest ride so that I can continue to build equity. On the third, or sorry, it would be the other 150K account. That one's at around $2,000, so it's $3,000 away from the trailing threshold stopping. So just want to give you an update for those of you who decide to stay here. As you know, I'm not perfect, but I did learn a lot about that. I journaled a lot about that, really studied the insane and very illogical and against my rules trading that I did that particular account. And yeah, so I'm not perfect, but getting closer. So let's see what the Robert Mathers, your ISP seems to have issues. Are you sure that they're all that good? So I did confirm with the ISP that so your internet service provider provides internet to your modem, and that's all that they're responsible for. So what I found was that during streaming using OBS is bit rate. So I have these thing called dropped frames. We were operating at a very high bit rate, and they kept on dropping frames so much that it disconnected my internet. So I'm gonna go with this streaming. I changed a few settings to use my GPU instead of using the CPU, and I'm hoping that this allows me to drop less because I'm using a lower bit rate as well. So like fingers crossed, this does not allow me to disconnect at all in the future. I lowered my bit rate, so I hope the stream is still okay. I hope it's still okay quality, but I'm really hoping that this holds this time. So it was OBS. I did confirm that it was OBS that caused some of these issues here. And it's funny because like OBS says it's your internet provider's fault. Your internet provider says it's not their fault. It's like the router's fault. So it might be the Netgear CA-X80 router. It's a modem router. It's one of the higher end ones. So might be that one too. I don't know, but I'm going to try a couple things here. And thanks for your honesty. Good luck with your new 150K account. Yep, slowly and surely. Very slowly and surely. Yep. Quality is good. Nothing noticeable from the old settings. Okay, good. Yeah. I did switch over to a different encoder for this stream because I wanted to test it out. So that's good that we're not seeing too much different there. Yeah. So that's it from this week. I mean, keep your eye out for this week. I mean, we're in this area is a balanced price range. So anticipate the first day being a little choppy, and then maybe Tuesday, Wednesday high of week, Thursday expansion lower, aiming for this IPTA 60-day low is what I would guess. Otherwise, if we are very bullish, I will expect like a really like trade up down week, since we are at this balanced price range. Okay. And I think that's it for you all this week. Let me know if there's any questions. Any questions from the crowd? Other questions? Looking to see if I missed anything up there. Some inter chats between users and fans here. Okay. Doesn't look like there's anything else here, so. All right, so let's wait. I'm going to wait out Monday. I'm going to look to see what Monday forms, and then I'll make my decision. You know, I'll look for Monday, Tuesday, Wednesday high of week, given our overall bias. Actually, my overall bias has shifted bearish. So I'm looking for, and this is something that's really important actually. So if we are bearish, we will expect to see price fall and go no higher than, I'll show you something here that I don't show a lot of people. So we would expect price, if we are very bearish, we expect price to go no more than the 25% mark or 50% mark maximum of the previous day's candle. Now, what does that look like in the previous week, right? So remember, this was the day before Friday's candle. Look at what happens. We get in the lower 25. Let me switch this around. It'll be a little bit easier to see these numbers. So whenever we're very bearish or very biased in one way or the other, you never see price travel much more than 25% of the previous day's candle. Notice how this just dropped that on that day. Let me go up to this candle here. So this got no more than the 50% mark, right? So you can keep those in mind when you get further along in the week, because this particular week, if you recall, we had Monday here, and we couldn't get even barely above the 25% mark of that one, right? Tuesday is fine. You know, we knew that it was likely gonna give us something before the larger expansion. So this candle went up to knock out a few early bears, but every candle after that, We barely made it above the 25% mark. So this is something that this particular setting gave us a really nice setup for, but moving into this coming week, we have to be a little more careful because of this balanced price range. So watch out for some consolidation. Doesn't mean you can't pick some lower time frame. Like you can't find some lower time frame plays, right? Nothing against finding lower time frame plays, but I think that you definitely want to find a way to frame your trades so that you're not going to get a huge bounce all the way up. You might get some movement lower, but you're more likely to take out and have lower lows form and turtle soups come back into internal range liquidity and continue to take out external range liquidity, even though we're really far down in this discount. If we see displacement higher, then you know that you can temporarily look for internal range liquidity to be targeted for external range liquidity to the buy side. So we just need to see what happens in this coming day for us to give us a shot at what type of weekly profile we'll end up finding, whether it's a Monday low high of day and then expansion lower, or Tuesday, Wednesday high of week and then expansion lower, or consolidation and then Thursday high of week, Friday expansion lower. There's a lot of models that can happen when we're this far below. Okay, so keep your eye out for that, and I think we'll end on that. So for anyone who's trading Asia, good luck. I think there are some very interesting trades. I think that there's going to be some room for us to target this liquidity void at some point, so that will get filled at some point. We've already gone past the halfway point of this gap, so I do believe that we will take that out at some point. Doesn't look like there's too much to really play with right now, but if I were trading Asia, I would be looking for price to reach up here, and I would be looking for price to actually come up to this sell side imbalance here, trade up, take this out as well, leave this open as a breakaway gap, and then head down to target this short-term low and these and these and this liquidity void. So for those of you who are staying up, that's what I'll be looking for. It can trade into this fair value gap, and these can serve as higher time, or this high specifically can serve as a target, because we definitely do have stuff that's a little bit higher than this. We have a little fair value gap down here too, so we can. But this at most is I would expect us to come back up to this, and then if we see it immediately reject, we'll target these lows here. That's a mitigation block, right? This would be on a lower time frame, yes, but we don't have. It is on a lower time frame, and we're in a huge discount. Remember that we had a huge weekly move lower. So if you don't see it immediately react at this block here, you could even go down to a lower time frame, and when you have this, and let's mark this out. Let me remove this real quick. Let me we're gonna do a little bit of science here. So we're gonna duplicate this and have that there, just for example purposes. So let's say we go down to a 1 minute chart here. We see that there's a bunch of little tiny ones, volume imbalance up here as well. So price could very much so come back up here and target these highs. So you need to, don't go in early, but if you do see it target this high up here, if you see it target this and immediately fail, or maybe like high, low, higher high, and then start to head lower, you can actually take this area and treat it as a space to take lower if we don't see major displacement higher, right? I'd prefer to see it at this high and this mitigation block. I'd prefer to see it just fail there, and you could then target this low. And if you are entering there, you could enter light and get stopped out if it continues higher. If you do that, you'd be ending up seeing almost a 70-point run from 250 to 55-ish to this short-term low down here, 17,220. So 70, 75 handles, pretty nice haul, even in Asia, right? But you have to remember that you have to zoom out and remember you're in a enormous discount. So this could continue heading higher up to this midpoint there. So you need to give it grace to do that, because that is the mark that it could head to, right? So if you see it displace higher, it's possible it just continues displacing higher, then you just wait. You know, wait for something to form appropriately. This is going to be very tough to trade in on the first day. So all right, team, I need to get going. I'm gonna end up getting some sleep, taking a shower, get some sleep. So good luck for those of you who are trading on Monday. Trade light, be careful. It's bound to consolidate a bit. It's going to be a little bit trickier in my mind. Generally, it's been trickier to trade on Mondays following a huge range week. So trade safe, and hope you get some rest as well. So take care. We'll see you. We'll aim to, actually, I'll probably aim to stream on Wednesday. It does look like these settings have not dropped me as much, so I'll try to aim to trade on Wednesday early AM and Friday early AM, since there'll be a little bit more to work with those particular days. All right, have a great evening, everybody. We'll catch up soon. Thanks for joining, and good luck trading. Take care.